Joining me now, Independent Advisor Alliance Chief Investment Officer Chris Zaccarelli. Chris, good morning. Let's start with Jay Powell. The futures market is banking on a rate hike for the July meeting. And overall, the consensus seems to be, at least from Fed officials so far that have been speaking, we're going to get 2 hikes for starting now through the rest of the year. What do you think?
Well, I think the Fed is indicating that they're going to raise rates 2 more times because I think they're trying to keep markets from going too far ahead of them. Having just taken a pause, the last thing they want is the market to start pricing in cuts. So I think to some extent the Fed is jawboning a little bit, trying to keep the market on its toes, make sure that we think there's still some more rate hikes ahead. Personally, we think maybe 1 hike will be it for the rest of the year. It really depends on how the inflation data comes in. If it keeps coming in a little bit softer, I think the doves will have some say, and it's possible we could get another pause. But for the most part, I think 2 hikes would be a lot, and I'd be really surprised if they went more than 1 hike for the rest of the year.
Yeah, especially if the economy starts to really worsen, and we're not out of the recession woods yet. By the way, New York Fed President John Williams and Fed Vice Chair for Supervision Michael Barr are actually going to be in New York today speaking, so we'll see what they have to say. The market and tech has been all about AI. You've now got this OpenAI executive saying, while artificial intelligence may create new jobs, it likely is going to eliminate some too. And you've got President Biden, he's going to be meeting with AI experts in San Francisco later today, speaking about it this afternoon, Chris. I think the concern with AI is that the government is going to overregulate something that they don't understand.
Yeah, I think that happens a lot, obviously, and that's something that's a concern because clearly AI is the hot topic of the year, and you've seen that within the stocks that are involved in AI, whether that's NVIDIA, Microsoft, Google. Really, that's the big technology that everyone's focused on, and clearly we need to understand a lot more about its capabilities, where it's going to go, and the government should take a slow approach in this. They should try to learn as much as they can, but obviously overregulation is the last thing you want with an emerging technology.
Former Congressman Doug Collins is on set. Does the government regulate things they don't understand, Doug?
No, we've never done that before. and really what Chris just said was interesting enough because you go back to the 90s when the internet was just booming and they Congress, of course, jumped in Section 230, which we all hear about now.
Geez.
That all came out of the 1990s when we really didn't understand what was going on. So let's be a little cautious here.
Yeah.
Pump the brakes, as they say.
Exactly, Chris. Rebecca Walzer's on set with me as well. What do you say, Rebecca?
Oh,
I mean, the tech rally has been all AI. It's been incredible.
I mean, I just remember a hearing where a congressman was like, "Can you explain what a shadow ban is? Have you been shadow banned?" And they're like, I don't understand what that means.
How do you make money?
I will tell. Well, okay, I'll save the story for later. I did have to explain to somebody on House Financial Services years ago what derivatives were. But anyway, Chris, back to you. Back to you, Chris, this morning. We're off track. As far as sectors go, what about AI? That's where all the excitement has been. Are there other sectors that you're looking at as well?
Yeah, I mean, I think you've seen all the excitement in technology and technology-related sectors because of AI. And because of that, I think we've seen a big run-up. You look at the S&P, it's up 14.9% this year. The Nasdaq's up over 30%. So we'd look outside of technology at this point going forward. If you're looking for opportunities, for the rest of the year and into next year, we'd be looking more at financials, industrials, areas that have been left behind that haven't really participated in the rally so far. Specifically within the banking sector, we like some of the larger banks, ones that are going to do well regardless of what happens with this interest rate environment.
Yeah, well, certainly, the second half of the year, obviously the economy is not out of the woods. The Fed is going to get, we should be clear here, more data before the next meeting. Then they continue to say they're data dependent. Chris Zaccarelli, it's great to see you. Thanks for joining us this morning.
Thank you.